Four-step process for deciding stock purchases. First, observe and analyze economic and social trends. Okay, give you a good one. Gas prices, up or down? Up. Every day I go to the pump, there's another nickel. You know, from 290, 295. Seems like it's on a trend going up. Okay, that's something we can talk about. It's one of those economic trends that are happening. The price of oil is going up. Now, a social trend related to that. Can you guys give me an example of a social trend related to the price of oil going up? What kind of car are you going to drive? You're going to purchase a smaller car. You're going to purchase something that's a hybrid, something that gets at least 30 miles to the gallon, because you want to go green. Okay, that's a social trend, right? To give to show how this affects industries, the Hummer discontinued. They used to have a joke about the Hummer saying it gets gallons to the mile instead of miles to the gallon. Okay, so yeah, that's how the industry would be affected. So cars are being changed until you got a situation where you have hybrids, you have cars that get high gas mileage. You also have alternative fuel like Chevy Volt that came out. So that's how it's being affected. Start talking about individual companies. GM, Honda. Honda has the Honda Leaf. Or is that a Hyundai? That always confuses me sometimes. Okay, and then you decide whether you want to buy or sell these particular types of stock. And if you have them already, you want to see if you want to hold on to them. Okay. Now, here's some things that you can look at. One of them is the 52-week high and low. This is one thing that you can look at to see if your stock is something you want to buy. Okay, it's how whether the stock has been traded over the past year, 52 weeks in a year. Okay, it talks about the volatility. Now, if you have stock, turn on this light real quick. If you have stock and in the 52 weeks you've seen something like this, and it's pretty close to daily, I don't know if I would want to buy a stock that's that volatile, that changes that often. Okay? What's wrong? What's happening with these crazy mood swings for this stock? Okay? I want something that's going to look a little bit more like, oh, I don't know, like this, like you're climbing a mountain and the price continues to go up. Little dips here and there, but nothing as drastic as the other example. There we go. And this talks about the pattern of the stock movement, and it also gives some indication of what investors think about the stock. Okay. The next one is EPS, earnings per share. Okay, the company's income after taxes divided by the average number of common shares outstanding. Okay, so what does that mean? Well, let's talk about XYZ Corporation. And I'm going to write this up here. When I pull this back up, it's going to cover the screen a little bit, but I want to leave it up. XYZ, they have shares, and we'll make it simple, 3,000. They have earnings in the amount of $6,000. We're dealing with little numbers here. The cost per share is $12. Okay? And the income, their net income, is $2,000. Okay, just for an example. You got to join us. Now, we're talking about earnings per share. Okay, earnings, they have $6,000 in earnings. How many shares do they have? 3,000. What's their earnings per share? $2. Okay? EPS is $2 per share. Okay? So that means for every share that they have, for every stock purchase that you made, they made $2. They had $2 worth of earnings for every share of stock. That's all that is. Okay? Now, it's the company's net income after taxes, okay? You want to look at companies with steadily increasing earnings per share. Because if that's going up, that means this company, for every share of stock they have, they are making more and more and more and more money. Okay? That's a good thing. You want to see that. The last thing is the factors that affect stock, value of stock. There are 4 factors that we're going to look at. Inflation. Okay, why is inflation important? What does inflation deal with? How prices go up. Okay, if the prices are too high, the consumer will stop buying because they'll figure that this is not, the value is not there for me. Okay, once again, $2,000 for a 19-inch black and white television. I don't even think they make black and white televisions. But do they make them? I don't know if they make them.
So it's funny to do this with gas, like they know who we gas, so they just keep rise, like.
They keep bumping the price up. Okay. It's kind of like, it's not really price gouging, but you can think of it that way. You know, the price goes up because the value of the money may be down. Could have something to do with interest rates. So you want to watch out for inflation. The second one is interest rates. You guys with me? Okay. Interest rates. If the cost of the money is too high, what do I mean by the cost of money?
How much it costs to make whatever you need?
Okay, remember, interest deals with what?
How much money you pay?
The money you have to pay if you borrow money, or the money you have to that you will receive if you loan money. So if that interest rate is too high, if it costs me 20% to get a loan, that may be too high for me. But if it costs me only 2.5% APR, that might be something I can work with. Okay? So if the cost of the money is too high, people are not going to buy. Now, if you really want a new car, Mr. Sailors, you want a new car? Okay, let's say that you wanted a brand new Toyota Camry. I could get you 0% interest. Oh, wait a minute. Your credit's not quite where it needs to be. 21.5. You good with that?
No.
You're not? Why? Is it too high?
Yep.
So you tell me if it's too high, then you're not going to buy it.
No.
Okay.
I pay cash anyways.
Good man. So if they don't buy it, the profits for the company go down. If the profits for the company go down, what do you think is going to eventually happen to the stock?
So,
Yes, ma'am.
is it the better credit you have, the less interest you have to pay on stuff?
Generally, that's how it works, yes. Because I want to tell you something. This is a little bit off the track, but I want you to understand this. If you have money, people will loan you money because they know you have a means to pay them back.